Righto, buddy miners, mate. Ora Banda. So, wait, let me get this right. It was drill hits, a corporate presentation, then some big news, and we'll get to it.
Cap raise.
The third one. You ruined it.
Oh, sorry.
Another bit of bloody love for the brokers in the Davyhurst story. What else we got? We've got a bit of a WAF update, Core Lithium, Dynamic, and Vysarn. Bloody Trav, you found a new little pet project.
Yeah, mate. I'm really interested in that business after spending 2 hours researching and writing up a bit. I'm like, I've got to do more homework on this one. Yep.
Hey, there we go. A couple of dribs and drabs. Sandfire, Strike, and Azure. Mate, she's all happening now. Let me take you on a bloody journey, money miners, and this is a mining actual story-related journey. Now, we know Ora Banda's Riverina Underground that's ramping up, but we know the operation's been losing money hand over fist every time that mill's been spinning, and remember the all-in sustaining costs? They were waiting on $20 to come in the door around end of April from 16 mil from Wesfarmers, and there was another $4 from Wesfarmers as well that they on-sold the royalty to for the non-gold parts of Davyhurst. They had 19 million in cash at the end of last quarter, 11 in debt. I think I said right, if they can get that money in the door from Wesfarmers, they might not need to raise money because the Riverina is on track to start stoping at the end of this quarter. So they were going to cut it fine. So that was on 18th of Jan. But, hey, the share price has gone up since then. 22.5 cents then. It was 25.5 yesterday. And today, the first announcement, new high-grade lode discovered at Sand King.
Yep.
Looking to be a potential second underground mine.
There's some sexy intersections there, wasn't there? Like headline numbers.
Yeah.
Yeah.
It looks mineable.
I'm sure you went to the weeds on that one.
Yeah, not too much. But you can mine it and you might make money off it. Then 4 minutes later, a company update. That's when it started getting weird. So
were alarm bells going off in your head at that point, Matty?
It's not for a bloody, there's no conference is at today by the looks.
It was an investor presentation time.
Yeah, it was a company update.
Yeah.
Yeah, a full bloody investor pres company update. But then 6 minutes after that, trading halt. Capital raise. Ora Banda raising $30 at 22 cents, going towards rapidly advancing Sand King towards FID as a second underground mine. So, and the good old general working capital, of course, and regional exploration. Had a webinar this morning hosted by Euros Hartley's. It was interesting, as I said. It was one of those, unless I never bloody follow and click on the links, it was the investor webinar hosted by the broker running it, but it was like something that you would have seen shitloads inside the Argonaut and Macquarie days. But as a 708, you don't see many of them that the brokers are hosting. Yeah.
No, you
I was
don't.
the first one I'd watch in. They're like, make sure you chuck your bid in before the close of the day.
Sometimes you see, it is rare to get the webinar alongside the capital raising. You often do see that though when it's tied to an acquisition and management has to explain, what they're buying and all that sort of stuff. But yeah.
So here's a bit of a comment from Mr. Luke Cray about the CapEx and what this mines look like. Expand on what I said. I'll play it for you.
Kind of presenting is a similar kind of CapEx requirement as a RIV. Is that
similar type ramp up. So where we see RIV as more potential upside in grade because of that high grade, we see this as more tons. So there's no old workings to get under, so this would be probably a bit quicker to first ore, but broadly similar, like expect a 30 mil drawdown, 4 to 6 months to first ore, then 4 to 6 months to ramp up to steady state. So we see sort of FY25 is really building Sand King like we did at RIV just 12 months after. So by the end of FY25, be it that like filling the mill with high grade is the run rate we really want to get to. Yeah.
Resource update due in March. So it looks pretty accelerated, this Sand King. So the resource is coming out March, FID in April. It looks like studies are going on already. Cut the portal in June, so around a year either way, end of FY 2025. Not going to be as high grade as Riverina, but likely more tons. So no mention on paying down the Hawke's Point debt of 11 million that they still have.
Did Hawke's Point say they were they would tip it in pro rata, or were they just letting themselves get diluted because they own shitloads of that company?
That is the one part of the raise that needs shareholder approval if they do choose to chip in.
Yeah, gotcha.
Nothing else needs because everything else is within the capacity. So,
But
I think that's been extended till the end of September this year. I think
the debt piece.
Repayment of that 11 mil. So, because you think Riverina capex was 30 mil that they said. Exact same amount of money that they raised last April was 30 mil. 30 mil again now. So,
Matty, you did a good spiel on the company not too long ago, trying to get into the weeds and see whether they'd need to do this raise. Now, obviously, they do, and I guess the question, if you're tipping money in now, is are they going to have to do another one down the track?
Well, I suppose, and it's always worded favourably, isn't it? This raise is when I guess when I was talking about it was like, will they need to raise to keep enough cash to get Riverina going? But obviously, this raise is to develop a second underground mine. So it's, I guess, for that purpose. The difference I see from the previous situation, they raised that money and they were still mining those the Missouri and Sand King pits at a loss, obviously to keep the mill, keep the mill going. So rather than turning it off and paying care and maintenance costs, it sounds like it's something they had to wear. Whereas in this case now they've got if they're going to develop this second underground mine, they're going to have Riverina chucking some high grade ounces into the mill rather than what they were relying on before, which was a heap of bloody open pit pus that just wasn't making money. So I guess if you can expect a similar capex spend, which they did mention it was going to be pretty similar to the Sand King underground mine, you never say never for a Davyhurst capital raise, but geez, you'd fucking hope this is one of the last ones for operationally, unless they keep expanding. But it'd be nice to see operational cash flows go into future growth beyond this one.
Good thing they trade at that premium, mate. It's all good.
Yeah, mate. Luke Cray was on the call, so it was all good. As long as he's there, it's bloody fine. So, because they got that mill's 1.2 million tonne per annum.
Yep.
600,000 tonne of ore, development and stoping combined, is anticipated to come out of Riverina in FY25. So they'll be targeting, I would assume, similar amount to come out of this proposed Sand King. So the mill will be now just fed with
the underground high grade
1.2 of underground. So it's getting rid of the low grade open pit pus. So
what else is in the use of funds there, Matty? I mean, it was just exploration working capital
FID, progressing to FID for Sand King, regional exploration and general working capital.
Yeah.
Now, I thought in the webinar Q&A feature, I'm like, why not bloody ask a query? Because one query we had in the last episode, the one thing up their sleeve was like if they were in cash troubles besides the capital raise, was the remaining 20% of the non-gold rights to Wesfarmers because Wesfarmers, once they satisfy their earning requirements, they get 80%.
Yep.
So I thought, ask what's the plans? Would they look to sell that remaining 20 to Wesfarmers in the future or not? Here's what he had to say.
Not really looking at this stage because the Wesfarmers deal is structured, in a really supportive way. So we're free carried. So they earn into 60. They've got bought in for 65%. They earn into 80% by spending $15 million over the next 3 years, and then we're free carried to DFS. And then each DFS, like on a particular area, that's the Wesfarmers have a right to buy us out of that project, but it doesn't convert the whole belt to 100%. So that's what we're really looking forward to in the deal, is finding a partner that's going to come in and just do grassroots, be there for the long term and build it up. But then also, like, one deposit sort of doesn't sort of define the whole thing. If there's another deposit found, we'll be free carried to the DFS on that one with the potential to buy out or continue with the JV.
So it obviously looks like be balls in their court if Wesfarmers get lucky and find a couple. So that was good clarity on that.
Did
Good
you
if
actually-
good if they drilled and found a shitload of gold. Be like, oh, cheers for that. That's ours.
Maybe the gold will be on top of the lithium, just like at Mount Ida.
Maybe right on the other side of the lepidolite. So, yeah, but that's all hinging on lithium not being in the friggin' toilet like it is now. So, yeah, wait and see. So, look, cash is obviously the big one for Ora Banda, as we said, and the sentiment around capital raises, especially in that Daveyhurst region. Because look, the way I see it, there's other ways to bloody increase the cash balance without bloody diluting and pissing off the market. And like the first one is making sure there's spec VSDs in those undergrounds. There's bloody 2 of them.
They were going to have 2 undergrounds now. Yeah, you want to be pretty thoughtful about the power going, up and down when you need it.
Get everyone off your back. Get the bloody vent on demand system as well, mate. At Davia, it's a no-brainer. Less diesel use for your secondary vent. Secondary vent consumes the most power underground. You would have learnt that after your underground mining training I've put you through. Mate, you can drop the diesel use for that by 50%. Then you get spec to do the HV installation and all the substations.
Wouldn't need a capital raise. No.
You wouldn't. You definitely won't need one ever again.
Yeah.
And because, mate, they've been there, they've done it, no chance of rework. They do it right the first time, every time. Mate, I don't know if they've got any fucked electric motors out there, legacy ones. Send them to Goldfields Rewinds, give them a rebirth, cheaper than buying a new one. How much money do you reckon we've just saved Ora Banda there, boys? JD, it'd be millions.
Millions to say the least, mate.
Oh,
no more capital raises after that.
Oh, and mate, and the next call after that, Ora Banda need to bloody call KCA.
Yeah, if you raise $30, there's one you're going to need a lot of crap.
Well, mate, speaking of a lot of crap, that extra underground mine means you need extra underground shitters. And we know that bloody KCA have them now. Mate, extra utes to bloody drive in between the tenements, mate, more people out there. Why outlay massive amounts of capital and hamper the balance sheet when you can just hire these things off KCA? When you're in this, bit of a tedious period. Mate, the mining contractor might even need some gear quickly for the ramp-up. Grab an IT, a Charmac, a grader, or an underground truck off KCA just to get you through. Lads, I think we've laid out the Sand King ramp-up plan on a platter for Ora Banda.
Yeah.
How
do you because the big question for Ora Banda is how do you stop rattling the tin? Well, we've just figured it out.
I pretty much think you come to us. Luke, give us a buzz if you need anything else, mate. We've got plenty of other 5-star suppliers that can make this Sand King underground just go nice and smooth and, most importantly, nice and cheap. So, mate, I feel like look at what we are doing for the industry. The brokers won't like us because they want another capital raise, but
shareholders will. That's
mate,
what matters.
That's it, mate. You know which side we're on.
Marty Law and Adam will bloody save you money.
Exactly, mate.
Matty, I don't know if your future is as an ads salesman or as running the best mining company out there, or as just being a corporate advisor. You're
mate,
all over
I reckon
it,
it could be my own turnkey solution for the mining industry. Simple as that, right, mate? WAF, what's going on, JD? Or do you want me to
WAF,
talk? I'll rate that one.
I'll let you get into it, but they came out with their
give me a breather for a bit.
They came out with their reserve, resource, and 10-year plan. So we'd been waiting a little while. It had been flagged that this one was coming out now. And I'm not sure about you, but when I first peeled into it, the thing that stood out to me was the timeline for bringing Kiaka online. So I had in my head second half of the calendar year 2025. Now they put it in a more specific band. They said Q3 of 2025. So that was a great step in the right direction.
Yeah, a lot of growth there. Just shame it's in bloody West Africa, but you're looking at what they produced 226,000 ounces last year. They're guiding for a bit less this year, 200 midpoint, but then pretty much doubling when Kiaka comes online, averaging 400,000 ounces over 10 years, peaking it's pretty much, once it's from 2026 to 31, 450,000 ounce producers. So that Kiaka project, it's pretty bloody, she's a big humdinger. That's 46 Ks away from their existing Sambrado, 19-year operation, 1.8 strip ratio, 8.4 million tonne plant. So
that's massive.
It's Sambrado, it's a bit higher grade in the pits, but it's only a 3.2 million tonne plant there. So look, they've obviously shown that they can mine lowish grade pits, but and Kiaka is a much bloody bigger scale. So I suppose let's put it side by side to Capricorn's Karlawinda. That's if you think of big low grade pits, they're usually the ones that come up. Here it is here. So the mill is obviously twice the size, hence bloody US 430 mil pre-production. CapEx is going into it for Kiaka. Grade's slightly higher, 0.1 grams, but that 0.1 of a gram can mean a bloody lot when you mine an 8.4 million tonne. Big mine life, 19 years. Capricorn's only got, Karlawinda's got about 10 left in it. Double the ounces coming out. Half the strip ratio of Karlawinda.
Is that the strip ratio life of mine average, or is that?
Yeah, that was on the latest prezzo from Karlawinda.
The latest one, yeah.
But yeah, remember Karlawinda's been going for 3 years already, and Kiaka's fresh as a daisy. But if you put them side by side, you can, if they get this Kiaka right, it should be printing some pretty good cash in the future. So it'll be exciting to see how it goes.
Matty, you
humdinger.
love the side by sides with the African project and the West Australian one. I remember when we kicked things off, you did your side by sides. You were fascinated, comparing
bloody Goulamina and Kathleen Valley.
Yes, that was the big one. And it's funny with
interesting.
10 months later, it's like, wow.
Well, they're both bloody.
Yeah, but one is like just absolute limbo. The other one, they've had a hurdle, but at least the production's around the corner, which Liontown shareholders have line of sight to.
But I suppose the difference here with West African, they've already got one operation.
Oh yeah, it's completely different to bloody
Mali.
Mali.
They've got some. It looks like that hopefully, and the different like Capricorn obviously own 100%. West Africa only own 90%. The government owns 10% of that deposit. So, but yeah, it'll be an interesting one to see how it ramps up. Big tons. JD loves some tons, mate.
I'm fascinated to see that one come online. And on the topic of lithium, we couldn't let a day go by without chatting about it. Core Lithium came out with an update. They terminated the mining services contract with Lucas Total Contract Solutions. So mutual agreement, they said, although Core's going to have to stump up $10 to make that all go away, and that cash is going to go out the door this week.
I bet you they wish it was actually $10.
I think they do, mate. So the read-through is that Finnis obviously isn't going to get flicked on anytime soon. No surprises there, given how it sort of sits on the cost curve. But as a reminder, Core still have stockpiles that they'll be treating for a little while to come. They ended the last quarter with 124 million in cash. The problem is, looking at that cost curve, and I'll flick up the chart from Citi that we spoke about a month or so ago. They're not going to really make money below US 1,500 odd. So it really leaves you wondering, looking at Core, where do they go from here? And what certainty do you have as a shareholder that pile of cash isn't just going to get whittled away? So short sellers they're all over it. Over 11% of the stock is sold short. That's the third most on the ASX. And I don't really see any solutions or any easy solutions here for Core. Although looking across the board at the remainder of the lithium names out there, it definitely feels like sentiment has improved recently. I saw Liontown back up to $1.27, PMET 90 cents, IGO over $8 again, Pilbara at $4.18 they hit today, Wildcat at 68 cents. I don't know what all the complaints about. Those share prices really are not so bad, and
they're just
even
remembering where they were, but
that's in the minds of the investors, no doubt, Matty. Even Core's ticked up. They've still got an EV though of greater than 350 million for a company that, even if the lithium price were to improve 50 odd %, I'm not sure they'd be making money. It's delicately balanced in my opinion.
JD, so this is them terminating the contract with the contractor Lucas Total Contract Solutions there. Now I'm pretty certain that the crushing contract is with CSI, which is obviously just MinRes. I wonder what the terms of that contract are if that one gets broken as well. What kind of termination settlement would be associated with it? But that's one to keep an eye on.
Yeah, I think you're absolutely right there, and even with this one, up until today, it's something they just keep very, very close to their chest. They don't want to have to give any indication to the market that they've got a big check that they have to write out to make something go away.
Yep, mate. I got in the weeds today in mining services world. Often we find ourselves talking about the mining companies themselves. We do talk mining services because our advertisers are mining services companies, but we don't often go into like the nuts and bolts of how these businesses works and how does a mining services company kind of build a moat, because that's a pretty damn tricky thing. And today I noticed that 2 mining services companies reported their half year results, and I was really keen to compare the pair. These 2 companies being Dynamic Group and Vysarn. I'm not quite sure how to pronounce it yet. But these 2 companies have had pretty divergent performance over the last few years. Since mid-2020, one of them's up 336%, the other one's down 56%, as you can see in this chart here. And I kind of think one of them might even be trying to be a little bit like the other, but let's not go there just yet.
Right, how about we start with Vysarn? Trav, educate me. I love it how I get educated on my own show. Never bloody heard of them.
I'm really interested in this business, and I've got to admit, this company was not on my radar at all until today, but I find it fascinating in the brief time I've looked under the hood. In a nutshell, they aim to be a fully integrated water management company, dominantly in the mining industry. If you think of the Pilbara iron ore world, there's a shitload of water around, and the mines out there, they're generally below the water table. So you have to just pump and de-water those mining areas, and you're often kind of relocating where that water is going.
I think cloud break from memory I've always heard was very wet.
Yeah.
So yeah, which is a big bloody pool you're working in. So you got to pump the shit out.
Yeah, and my rudimentary understanding of that process is you got to drill these water wells, stick steel pipe down them, and then you use those pipes to pump the water out, and then you blow that area up. And that dewatering part of the business was the first thing that Vysarn started doing. In 2019, the company was simply just a shell company with a bit of a cash box, like $7 million cash in there. That listed entity agreed to buy Ausdrill's water well assets, known as Connected Drilling, back in the day for $16 million, partially debt financed. They built that business out, and it's now known as Pentium Hydro. And they built it out for a few years, and they underpinned it with some contracts with FMG, BHP, and Roy Hill. And you can see in Vysarn's acquisitions that came, subsequent to that, they focused on vertical integration within that water management domain. In 2021, they acquired Yield Test Pumping. Now, that was a specialist test pumping business with the ability to measure everything you need to measure when it comes to pumping, so that the hydrogeologists can make informed decisions. That business is now known as Pentium Test Pumping. In 2022, they acquired ProEng. That was a hydraulic engineering business, and you can think like this business has the hydros, right? It also has a lot of IP on aquifer reinjection systems, patent and tech, etc. And in the same year, in February 2022, they organically launched a water consulting business, which they call Pentium Water now. Within 10 months of launching, that business had 19 personnel and 35 clients, including BHP, Roy Hill, Pilbara, Atlas. So at this point, they've got borefield construction capability, hydro data and testing suite, in-house expertise via the consulting team, and contracts with the majors so they can probably see all the data they want to. And this is where the strategy becomes really damn interesting to me. 4 months ago, they announced the launch of a division called Vysarn Asset Management. And I'll read out this quote from the announcement at the time. Vysarn Asset Management, or VAM as they call it, is the continuation of the company's clearly defined strategy to build a vertically integrated whole-of-life end-to-end water business. By leveraging the company's extensive in-house intellectual property, VAM intends to target investment opportunities in water, infrastructure assets, and associated opportunities to control, own, and toll water. Vysarn has a suite of opportunities that it is currently evaluating. Now,
mate, remember at the end of The Big Short, Michael Burry, when they said he cancelled the fund and he was invested in one thing, water.
I don't remember that.
Mate, bloody, I think I've watched it 79 times. So, yeah, mate, water.
I'm super, they call it VAM, right? And my memory goes back to Macquarie days, and they had this division called MAM, Macquarie Asset Management. And I'm kind of like drawing some parallels in my mind from that. But
So why is that? Why has this perked your attention? This strategy, Ricardinho?
Mate, it's really, really interesting to me because it's effectively a mining services company that has built out a vertically integrated capability in water management, and that concentration of expertise they think could give them an edge in owning the infrastructure required to transfer the water and manage the water solution. So here's a slide I've plucked from the November AGM presentation. There's 3 interesting parts on this slide to me. Number 1, they talk of being able to facilitate a transformational acquisition now. Number 2, they have $25 million in debt capacity that they can utilise if they want to. And number 3, they have already identified pipeline development opportunities, which is like physical pipeline, not something in the works, like an actual literal pipeline.
Yeah, right.
Development opportunities, which they are crunching the numbers on right now.
Bloody she's been a bit of growth and action from a shell company, isn't it?
Mate, I read that and I think I know how this company would sort of pitch its plans, right? Like, let's say Vysarn's consulting business identifies a standout, potential infrastructure pipeline development opportunity as and the asset management business, which they recently launched, they could kind of package that development as an investment opportunity. This is infrastructure, right? So you need a bunch of capital in order to fund that infrastructure. But the payoff of owning infrastructure is annuity-style income because you collect a toll on the infrastructure's use. And the Vysarn asset management division would also charge a management fee to manage and operate that infrastructure. Plus, if they're relocating that water from the mine to somewhere else, be it in Headland or otherwise somewhere that might have a shortage or needs the water, then you can also get water rights associated with it, which would be a further interesting thing. They can monetize both the water itself, but also the infrastructure associated with it, depending on how they actually fund the capital for the construction of that infrastructure. Now, the funding of that, you could do it in conjunction with, potentially the tier 1 miners, utilities, or otherwise. And Vysarn, to be clear, they haven't done their first infrastructure deal yet. They only launched the asset management arm in October last year, remember. So the jury's still out as to whether they can pull off the strategy. But if they do, that would be a seriously, seriously impressive feat. Like, imagine going from a shell company to which buys a shitco of drilling, a shitco drilling business essentially. It was a division that Ausdrill didn't want. That's what they bought, and they picked it up for $16 million. But imagine doing that, and then to potentially becoming an infrastructure company that owns infrastructure assets within half a decade or so. That would be pretty interesting. The water management infrastructure is a massive industry globally, and the companies that do it trade at big juicy multiples because infrastructure is a moat. Whereas like a mining services company, they don't trade at big juicy multiples. They operate on skinny margins in competitive environments, which brings me to company number 2.
So the company 2 that is the lower of the performance compared to Vysarn.
Correct, mate.
Dynamic Group, ticker DDB. This is brilliant.
This company was formed out of a merger between 2 ASX-listed companies, being Orlando Drilling and then Dynamic Drill and Blast. These 2 companies merged in 2021. Orlando did, you can think, your surface exploration and grade control. Dynamic did mine production, drill and blast.
Right. So what's this mob up to? Take it away.
Since 2021, when they, these 2, drilling companies merged, they continued to diversify by acquiring more private mining services companies, namely Well Drill in 2022. Thinking injection wells, production supply wells.
That's bloody big. There's the big factories up the road from me in Coburn.
There you go,
the basketball court.
I didn't know that. And Airwell in 2024, so like flow testing services. Unfortunately, DDB doesn't separate their performance by segment in their reporting, which frustrates me, but you can't see how these individual businesses are doing versus each other. But I'm kind of under the impression that the performance is held up a bit by the the water drilling business there. Unlike Vysarn, they've diversified their business horizontally. So surface drilling, mine drilling, water drilling, air testing, you're broadening out your offerings there instead of vertically, like in Vysarn's case, it's like everything water. So in vertical integration, I think that can allow a mining services business to capture excess margin. And think of MinRes as an example, right? A big part of that business is the vertical integration strategy. Own the equipment, own the mine, own the plant, own the roads, operate it all yourself. That's vertical integration in a lot of ways. And for the half year, like if you just want to compare the financial performances of the two companies, Vysarn produced $4 million net profit after tax, has an EV of $94 million. DDB, $3 million for the half year in NPAT with an EV of $45 million.
Right. So what's the overall conclusion of the two, Trav?
Well, I can tell you which one I'm more curious to learn more about, and that's Vysarn. And if you own infrastructure, that is such it's a completely different game. It's a completely different way to think about a business model. They're not there yet, but their strategy is interesting enough to think that they might have a crack at it. And until they actually pull off a deal where they, are set up to actually own infrastructure, then take it with a grain of salt. But I'm really, really intrigued if they're onto something there where you can imagine bootstrapping yourself to own bloody pipelines and own the water and be able to toll that for a fee. That's a very, very different business model to a drilling company. Very different.
Yeah. Right.
You've piqued my interest there, mate. I'm keen to see what this has done to the cap structure. Because the first thoughts are you need cash and everything. So I'm keen to delve into what the top 20 ownership looks like and all of that.
Yeah, well, I don't think of them as having to fund the infrastructure themselves, right? Because if they've got the rest of it, then they can package it all together and then bring in your partners who will fund the infrastructure. They might choose to own some of the infrastructure, like a small percentage. They might choose to own none. They might get free carried. They might they might just get the water rights, or it's kind of like a farm out in some ways where you get you do all the work, but someone else, is your funding partner. But because you have the capability to operate and manage it, you still are a part of the economics of the annuity toll clipping along the way.
Yeah, definitely. That makes sense.
Right, JD, bit of news out of Sandfire America. So I'm assuming Sandfire America is the Black Butte copper project in Montana. God, that brings back some memories when I was at bloody DeGrussa. That was the first thing they bought as the next potential project, and you've only got to watch Yellowstone and figure out how bloody environmentally sensitive Montana is.
Was that Mod when they acquired Mod Resources? Was that what?
No, that was Mod was the African assets that are part of.
Yeah, I think they just bought this project. Yeah. So it's still sitting there.
It's fascinating. I'm not going to lie. I didn't actually know that Sandfire America was a separately listed TSXV company. So I learned that today. And the Sandfire that we know, are 87% shareholders in that listed company. So
they probably wanted to separate it out of this Sandfire, hey?
Yeah, absolutely. So, I mean, you've touched on all the talking points there, Maddie, which we're going to get into. But the important reason why we're talking about it today is because they received the permitting approvals, which had been taken off them a few years ago to construct the mine. So the stock listed over there in Canada was up over 125% on the news. So Sandfire America is capped over 200 million now. And like you say, that Black Butte copper mine or copper project rather in Montana had been tied up for a long time in permitting, in getting all the rights to actually build it. You can just take one look at the presentations and you can see they put a lot of work into getting community buy-in, doing everything by the book. And it seems like they've gone through pretty rigorous environmental approvals now. They've gone through all the courts. I mean, the discovery hole was drilled in 1985 here. So it's been a long time in the works, but by all accounts, it looks like things could be approaching. And just to rattle off some of the numbers so people get a feel for what we're talking about, it's not massive. It's 23,000 tonnes of copper per annum at a C1 cost from when the study was done at US $1.50 a pound, 8 to 10 year mine life. The study was 8 year mine life at 1.2 million tonnes per annum, with a construction capex of US 275. Now, this was done in 2020, so you got to take those numbers with a bit of a pinch of salt, because inflation is going to have ripped through them, and I'd imagine they're not just going to go and construct the thing straight away. They're going to have to do a fair bit more work to see how the economics stack up nowadays.
Yeah, it's very much. God, it's been there for a while. Right, strike energy, JD. Half year, bloody. How's your strike misery going today?
Well, I mean, I'll talk through it, and massive ding, ding, ding. You can take everything I say with a fat pinch of salt because I own stock, so almost discredit it. But there's an interesting sort of play involved with, no secret, the share price is off 50%. So I'll start with the half-year results. They were accompanied by a letter from the chair, which is Mr. John Poynton, a well-known, WA business person. So
that was Hartley's Poynton, wasn't it? That Poynton?
I believe it was his father who started the business.
Righto, yeah.
So, that accompanying letter was obviously written to address the fear in the market regarding the stock and kind of arrest the massive decline that it's been on. And there was one little detail that stood out on that letter. He signed off with both his and Stu, the managing director of the company, the CEO, their email and phone numbers. So, people have been pretty rightly critical of management in this business, but it's good to see in a way that they're not shying away from it. They're open to questions, although I'll caveat that with the fact that they did this Q&A and the call today over Microsoft Teams, and they had the questions at the end read out aloud after having been, submitted to the IR team there. So I'm not a big fan of that practice. I'd rather the analysts be able to ask the questions directly to management themselves.
And then ask a follow-up based on that.
Yeah, exactly.
Needs to be one-on-one, JD.
Couldn't agree more, mate. So what
did we learn, mate, from the half-year report?
Yeah, I mean, I'll skim a couple of the highlights from the report. So importantly, 67 million in cash. They try to dress this up saying what their liquidity position is in the presentation, but actual cash is at 67 million. On West Erregulla, they're targeting first gas late 26. So that's the 50-50 JV with Hancock Energy. Now that's still subject to FID, and discussions, are ongoing as to how they get there.
Because Gina acquired Warrego to get that 50%.
Exactly, and we're gonna get into that a bit more. South Erregulla, which has been the centre of attention with a couple dud appraisal holes, is gonna have reserves and the project development update coming in this financial year, so within the next 6 months. Now, the ASX, they were intrigued, to say the least, by the trading pre the South Erregulla update. That was, that came in the form of an ASX update a couple of weeks back, and Strike came out in their response on Feb 19, and they pretty much said, that interesting trading activity, which you went through, Maddie, was a factor of the ETF flows. So nothing to see, nothing to do with the fact that...
Did they buy it?
Well, it's gone quiet for now, but it was there was an article in in the West on this as well.
Yeah, it was heard on the terrace, and it was heard on the terrace is when people basically submit like rumours that they try and do to name and shame people essentially. And the angle of that article was basically suggesting that it might not have been ETF flows. But yeah, anyway.
I think you're spot on. So there was a couple of questions in and around this on the call, and there's been heaps of stock turned over since the bad appraisal well results came out. So Stu was queried in the Q&A on potential updates to the top 20, and he knocked it back with a straight bat. He said it's hard to collate this information and whatnot. So I don't really buy that. I reckon, you're the company, you can get that info pretty easy. I would assume the intention of somebody asking those questions is to see, is anyone buying a stake? Is anything, a bit more than perhaps meets the eye initially going on?
Or is one of
an update?
Yeah, or is one of the well-known, top shareholders being the seller?
Well, I heard Goyder sold all his shares not long ago.
Did he?
Tim Goyder, yeah, that was the word on the decline. So
that was pre all bad
this.
Results.
So he's had a win, which he needed.
Yeah,
so they're actually by whatever it is, Corporations Act or whatever, they're supposed to hand over a top 20 upon request, aren't they?
I believe so, but I'm no expert on
Yeah,
the
you
on the
are.
Corporations Act, Matty.
Yeah, you are.
It will be under
So-
whatever act it is. I think it's that one.
They
Yeah.
can charge you like $200 or whatever. But yeah, they have to give it to you.
Yeah, and we've seen 20 odd % of the shares on issue turn over in the days following that bad initial result. So, yeah, I mean, let's get into the juicy stuff and why I think this could be of a bit of interest to the money miners. So, looking at a rough valuation, Strike currently have a market cap floating around 600 million. Like I said, cash at 67 and debt 24. So, an EV, call it 560 million. Now, on the back of a 50% fall in the stock price, I'm sure, there's no doubt that a couple of potentially interested suitors out there might be running the numbers over Strike. So let's give a bit of a rough idea of what a valuation could look like just from past transactions. So putting South Erregulla to the side for the moment, you got Wailering that Strike bought 45% in the takeover of Talon, which wrapped up in December from memory, and that was for roughly 100 million. So you can imply a value of 220 for 100% of that project. Now you've got West Erregulla, which you rightly touched on before, Trav. That's the 50-50 JV with Warrego, which Gina bought. That was a fascinating bidding war that involved Strike, Chris, Gina, Kerry Stokes' Beach Energy, or the company he backs. I really wish Money in Mine was around for that, because that would have been fascinating to follow. Hancock ended up winning out on that one. They paid about 440, but Chris voted his shares, or Minres's shares rather, in favour of Hancock's bid. So,
Hey, JD, all three of those billionaires are now teaming up for the nightly. Did you see that one?
Yeah.
I sure did. Won't have a bad peep written about them in there, I'm sure. So
Good alignment.
back of the envelope, 440, 220, you're getting at about 660. Obviously, this is a pretty rough go at valuing the things, but that's just those two assets, and that's not attributing any value to, all the other things we've spoken about, exploration assets and whatnot. So those players that we just mentioned, they are interested in WA onshore gas. They're all involved in it in one way or another already, and I think Strike could very much be a takeover target. Stu didn't play into any sort of predators looking to acquire Strike stock on the call, but I did notice there was questions posted in the chat of the Microsoft Teams call. Now, giving them the benefit of the doubt, they were posted pretty late on in the call, but they were ignored, and they were asking pretty pointed questions in and around, has there been any interest and whatnot. So no response on that front. But regardless, I think we can say with quite a bit of confidence that there are interested buyers. Obviously, it all depends on price. Now, we also know that Minres were in a rush to sell their $230 million stake in Azure not too long ago, which, Trav, you pointed out was going to net them a pretty decent return if they just sat on their hands a bit longer. So the question I want to pose to you guys is, what are your thoughts on Minres, or potentially any others getting involved in Strike?
Yeah, I agree with your sentiment that they'd want to be defence ready, right? I mean, your share price comes off 50%. You can do a back of the envelope some of the parts valuation at the moment, and effectively, see that based on previous acquisitions that were all within the last 12 months. It's quote unquote kind of a value play at the moment, because it's been beaten so much by those dusters. As for Min, we know they had interest in Warrego in the past because they were part of that bidding war. I think it all comes down to how defensible would any bid be for this company as well, because, and keep in mind, the billionaires, with Azure, we kind of felt like they were kind of coordinating in some ways too. So are they going to get into a bidding war again? I don't know, probably not. It'll just be some bloody, there might be, it might not work out that way, but yeah. Is it of interest to Min? I think it is, right?
But then you look at like Min and Gina. God, they might end up spinning out bloody shitloads of companies. Imagine if they've obviously got some sort of alignment, because he flicked the bloody gas stake to her, or said, "No, you can have this one." But they got their gas interests together there. Then bloody put the lithium together. Put the bloody. I don't think they put the iron ore together, but it's. Yeah, you wonder if they'd spin out a bit of a pure play WA gas play out of this.
I think it's all a bit case by case. And Gina's, gas, work is a lot more advanced than Chris is at the moment, given that Gina, in consortium with POSCO, acquired Cenex, which, on the East Coast is already up and about, producing.
Well, you guys both touched on alignment there, and, it's worth raising the point that the current partners between Warrego and Strike have different, intentions of how to develop and the end goal for the project there. So Mins and Hancock, I believe, would be much more aligned in that they want gas for mining operations. So that's a bit different to putting it into a fertilizer plant or whatnot. And the last thing to mention on Strike in terms of other catalysts, which Chris Ellison has been pretty vocal on, is changes to the domestic gas policy. We've spoken about that a bunch, but that's meant to be imminent, although it's been the case for a while. So March is what I had circled in my calendar for an update on that front.
I'm pretty sure, Jay, I'd have to check it myself, but I was told that if you looked at MinRes's bidder statement for Warrego, go back 12 months and pull that up on the Warrego ASX announcements, they accidentally put Strike's ABN in there instead of Warrego's.
Yeah, I did hear that too, mate. An innocent mistake, we call it.
Oh, it'd be bloody, mate. That's one way to sort balance sheet. Do a big IPO. Bloody piece of cake. Right, well, JD. Bit of news out of Azure.
Yeah,
the
last
survivor
one to wrap
of
us
the
up.
lithium bubble.
Yeah, very much so. They came out with the competition law approval. So these aren't really the big ones, so we'll just touch on it quickly. But the competition law approvals were obviously something required to get this deal done. They're not the FIRB approvals. They're not the shareholder voting approvals or anything, but just another check in the right direction. And I just thought it was worth mentioning, given the stock's still trading at $3.54 last time I looked. So a bit off from when that Mins block went through, although it's ticked up a bit since then, but $3.70-ish is what we'll likely see that deal go through, if it does, in the not too distant future.
Very good, mate. Well, there we go, boys. Thank you very much. And thank you to all the partners, as per usual. VRIFY, InvestorHub, DSI Underground, Spec Power and Technology, McMahon Mining Title Services, KCA Site Services, Brooks Airways. And speaking of Brooks Airways, check out next to Trav there, the beautiful bloody Brooks plane that we have in the building now. Look at that. Have a look.
Beautiful.
Beautiful.
The Land Cruiser of the Sky, the King Air. Mate, and we've also got, can't forget, K-Drill. Hooroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.